Ladies and gentlemen, good morning. We are about to start in a couple of minutes. Please can I invite you to take your seats so that we can make sure we start on time. Thank you. Good morning, everyone. Please, can you take your seats? We are going to be starting very shortly. Please take your seats. Thank you. Good morning, distinguished guests, ladies and gentlemen. Please can I invite you to take your seats now as the seminar is about to begin. On behalf of AMRO and the IMF, it's my great pleasure to welcome you to the AMRO-IMF joint seminar on cross-border digital payments. My name is Aziz Durrani and I'm the team lead for technical assistance at AMRO. I'd also like to extend a very warm welcome to our participants joining us virtually. We are delighted to have you online and look forward to your active participation in today's discussions. Today's seminar brings together policymakers, central banks, international organizations, academia, and private sector leaders from across the ASEAN +3 region to exchange views on one of the most transformative developments in global finance, cross-border digital payments. It is now my pleasure to invite Mr. Kenichi Nishikata, Deputy Vice Minister, Ministry of Finance, Japan, to deliver the welcome remarks. Mr. Nishikata, please. Thank you.
So good morning and welcome to Osaka, the center of Japanese culture. And it's a great honor for me to receive you here and deliver opening remarks at this today's seminar on cross-border digital payments, jointly organized the AMRO and IMF. Let me begin by expressing my sincere appreciation to both institutions for convening this important event And I would also like to extend my gratitude to the distinguished panelists, moderators, and speakers, as well as to all participants from ASEAN plus 3 countries for their valuable engagement. In recent years, developments surrounding cross-border payments have progressed significantly, as you know. Across the ASEAN region, we have seen rapid changes in real-time payment systems and QR code linkages, which are beginning to transform cross-border transactions of individuals and businesses. And these trends could be further accelerated by the advent of tokenized forms of money, namely central bank digital currency and stablecoins. Ultimately, such progress can contribute meaningfully to deeper regional integration and support economic development across Asia. At the same time, such technological innovation for transformative potential could entail challenges as well. We must remain vigilant about the risks that these new technologies and instruments may accompany. As AMRO's paper suggested, issues such as money laundering and terrorist financing risks and potential circumvention of capital flow management measures require careful and coordinated attention from policymakers and regulators. In particular, foreign currency denominated forms of money may pose even greater challenges, as they could lead to currency substitution, where local people are willing to abandon their own currency and switch to using a foreign currency. This currency substitution, if it happens, could undermine monetary sovereignty, which potentially weakens monetary policy transmission. I just recall a book of a Japanese professor in economics, Iwai Katsuhito, saying that currencies have something common with languages. Depending on the degree of trust and a spread of a language, people can choose which language to use in their lives. Once a local language is lost in local communities in their daily conversations, it would be very difficult to revitalize an extinct language. With this in mind, it would be necessary for us as policymakers and experts in this area to ensure that innovation progresses will not undermine financial stability, and sound governance of our each economy. I'm very much looking forward to today's discussion, both in the sessions and the roundtable discussions. I hope that the insights shared today will help us deepen our collective understanding of the opportunities and risks ahead, and will inform future discussions on cross-border payments within ASEAN Plus 3. Thank you very much, and I wish you all of you have a productive and a meaningful discussion. Thank you.
Thank you very much, Mr. Nishikata, for your insightful remarks and for setting the tone for today's discussions. We now move to session 1, the impact of stablecoins on cross-border digital payments and regulation. The rapid rise of stablecoins has the potential to reshape payment systems globally. While offering efficiency and speed, they also raise important concerns, including financial stability risks, regulatory gaps, and implications for currency sovereignty. To guide this important discussion, we're honored to have Mr. Tatsuya Sugiura, Advisor, Monetary and Capital Markets Department at the IMF, as our moderator. Please can I invite Mr. Tatsuya up on stage to invite his panel up. Thank you.
Okay, thank you, Aziz. Good morning, everyone. It is my great pleasure to welcome you to this panel discussion on the impact of stablecoins on cross-border payments and regulations. My name is Tatsuya Sugiura, and advisor at the Monetary Capital Market Department of the International Monetary Fund. Today, I'll be the moderator of this session. As Mr. Nishikata mentioned in the opening remarks, development surrounding cross-border payments have progressed significantly in recent years. Among these developments, stablecoins have gained considerable attention. Originally, they were used primarily for crypto trading, but now they are being discussed as potential or actual payment instrument in cross-border transactions, even retail transactions. This rapid change has the potential to reshape capital flow, cross-border capital flows. The development of stablecoins raises fundamental questions, especially for policymakers. Are stablecoins truly a game changer, or are they simply another payment instrument with familiar risks? And how should policymakers respond, especially in cross-border contexts? Today, we will explore both opportunities and risks, and more importantly, we will consider how we can build a healthy and resilient ecosystem. We are very fortunate to have three distinguished panelists today. Starting from my side, we have Professor Kenichi Ueda from the University of Tokyo. As you may know, he is a leading scholar on macro-financial issues and monetary policy. He has also served for many years as a member of Japan's Foreign Exchange Council, contributing to policy discussions on international finance. Next is Mr. Peter Goodrich from the Financial Stability Board, FSB. He has been deeply involved in global regulatory coordination on crypto assets, including stablecoins. He played a central role in the FSB's thematic review on the global regulatory framework for crypto asset activities, published last October. At the far end is Mr. Takahide Habuchi, who is the co-chair of the Policy Development Group at the Financial Action Task Force, FATF. He has been working at the forefront of global standard setting for crypto assets, including stablecoins, from an AML and CFT perspective. He also serves as Assistant Commissioner of the International Affairs Office of the Japanese Financial Services Agency. Let us begin with current landscape of stablecoins. To set the stage, I'd like to begin with Professor Ueda. Professor Ueda, how significant is the actual use of stablecoins in today's cross-border payment? Should stablecoins be seen as a potential game changer relative to traditional cross-border payment arrangements that rely on existing financial infrastructure? How do you assess their key benefits and risks? Professor Ueda.
Thank you very much, Sugiura-san. Well, first of all, I think how the stablecoins are used right now, I believe IMF and FSB or BIS people know much better than me, so I should not talk much. But I do know from those places, lots of publications that stablecoins right now, of course, are mostly used in the ecosystem of the crypto assets trades, but increasingly it is used in kind of real transactions. That's I think the current situation. Probably this trend will be going ahead, I think. And then it's a game changer or not, I'm not so sure, but it is really one of the threat to the current or legacy system, but which, however, legacy system somehow needs to be updated anyway. So the one of the way to update is stablecoin, I believe. But whether stablecoin is good or bad, or who should judge? Is a user should judge in a, in a capitalist society, or somehow the public involvement needed? That I think that is a question. And then regarding the benefits, we already know that users want to have those stable coins or any better technology-based digital financial payments tools. That's because it's high speed and low cost. That's definitely a good thing. And then for the stable coin or crypto asset in general, it's also anonymous. So this is a benefit from the viewpoint of protecting privacy, obviously. At the same time, we do know that anonymity is a double-edged sword because it's an obvious concern, especially I think Habuchi-san will talk about AMRO-CFT perspectives. High anonymity is obviously a threat or some kind of cost associated with regulation. Another concern, I believe, is that if stablecoin become indeed widely used as a public payment system in a global way, then something that reminds me is like 10 or maybe 15 years ago, we talked about too big to fail in global financial crisis. So that a similar thing could happen with if the stable coin, some stable coins are very widely used, then it's become a kind of public good for the global economy. Then the question is, if something happens, how we can save it? Right. So that question arises if the stable coins jurisdictions have a weak regulation and weak fiscal capacity. Probably it couldn't be saved. At the same time, in normal times, we have to think about kind of similar kind of consideration as we are now dealing with G-SHIBs, probably. That's probably Peter will talk about, I believe, after me. Thank you.
Thank you very much. That was very comprehensive and thoughtful assessment. So, Mr. Goodrich, some analysis suggests that the current use of stable coins in cross-border payment remains relatively limited in scale. Could you share the FSB's view of recent development in this area? In addition, the FSB has emphasized the principle of same activity, same risk, same regulation. National authorities moving quickly enough to apply this principle in practice, or are they already struggling to keep pace with development? Peter.
Yeah, thank you. Thank you for the question. So I think the FSB has obviously been doing a lot of work in this area, both on policy development as well as monitoring developments. I think we would certainly agree with Professor Ueda. We don't yet see stablecoins being used in real economic activity, at least in a significant way. The primary use case that we observe is for speculative trading. For most crypto asset trading pairs, stablecoins in US dollar is the most liquid. That's where we see the most use cases today. But we are seeing the stablecoin issuers getting larger. One of the particular financial stability risks that we're focused on is the size of the reserve assets for some of these very largest issuers. Their reserve asset portfolios are as large as foreign government holdings or the largest money market fund holdings of US Treasuries. So any kind of run dynamic there with large-scale fire sales could obviously have impact on global financial markets. So that's something we're looking at closely. You mentioned implementation, and obviously we just did a big implementation review that you mentioned. We published that in October last year. And there what we found is that unfortunately on stablecoins implementation has been slow, and in many cases it's been incomplete or uneven. And so we looked at about 29 jurisdictions in depth, so we looked beyond the G20 membership. And among those, we only found about 5 that have developed a significant progress on stablecoin frameworks, and then among those, only 2 that really have implemented each of our recommendations of the FSB recommendations for global stablecoins. So there's still quite a lot of work left to do. I think some of the areas where we found more gaps, things like resolution planning, so if these become significant enough, they need to have processes to wind down their operations, risk management, as well as contingency funding plans, so planning for a contingency event. So these are some pretty critical areas if stablecoins become more significant. So I'd say overall there's certainly more work to do, and I think we'll probably get into more detail on that throughout the discussion.
Thank you, Peter. Mr. Goodrich. And so you mentioned the regulatory development are uneven in globally. So could you expand on that? So what practical consequences might arise from a lack of harmonization across countries?
Yeah, so this is really a key question and one that we, I think, highlighted in our reports. It's a concern of the FSB, and really uneven implementation will create opportunities for regulatory arbitrage, where these stablecoin or crypto asset intermediaries or issuers can essentially pick up, if they don't like their regulator, if they don't like their jurisdiction they're operating in, they can easily pick up and move to a different jurisdiction that maybe has a lighter touch regulation. We've already seen this with the very largest stablecoin issuer. They recently moved jurisdictions, presumably because they didn't like perhaps what their regulator was doing. And so if we don't have even and harmonized implementation of a consistent framework, you're more likely to see this kind of race to the bottom dynamic around regulatory arbitrage, as well as potential regulatory fragmentation if you have small differences in regulatory frameworks. And this was another key issue that we identified in our report, particularly for stablecoins or global stablecoins, the so-called multi-jurisdictional issuance problem, where some of the very largest stablecoins issue in multiple countries under different regulatory frameworks, but it's the same fungible token on the blockchain. So when you're on the blockchain, it's no different whether it's a token issued in the US, in Europe, in Hong Kong or Singapore or Japan, but each of those countries may have different requirements around the redemption periods, whether the reserve assets need to be within the jurisdiction or can be abroad. And these slight differences can create challenges, certainly supervisory cross-border challenges, increase the potential liquidity risk or operational risk for this global, really it's a cross-border or borderless product, but the regulation is still very much constrained by borders. So this is one of the key topics that we're investigating further in our work this year, and we'll hopefully be delivering a more detailed report later this fall that goes into this in much more detail.
Yeah, thank you very much. So now what I'm thinking about the risk of illicit finance. So Mr. Habuchi, the FATF report published last June noted that the use of stablecoins by illicit actors has risen, with most on-chain illicit activity now involving stablecoins. As the use of stablecoins expands in cross-border payment, what key risks should policymakers be particularly aware of? And in this context, could you introduce policy responses FATF has taken so far to address the risk of stablecoins?
Thank you, Sugiura-san. And also thank you very much for IMF and AMRO for inviting FATF and me to this important discussion. It's my great honor and pleasure to be part of the panel today. And my home agency is Japan's Financial Services Agency, and I'd like to start by why I represent FATF today. I joined FATF community about 7 years ago as a representative of Japan's Financial Services Agency. What happened 7 years ago? That was the time when the first famous stablecoin project called Libra by Facebook was launched. Since then, I have been reading and heavily involved in all the relevant part of work on stablecoins in the context of today's discussion as part of the, as a co-chair of Virtual Asset Contact Group of FATF in the past 3 years, and as a co-chair of Policy Development Group of FATF in the last 4 years. So I think my career at FATF coincide with the history of FATF's policy discussion on stablecoin. So at the FATF, Virtual Asset Contact Group is tasked with monitoring the space of virtual asset and stablecoins, and the Policy Development Group, or PDG, which Virtual Asset Contact Group reports to, is responsible for revising FATF standard and for formulating policy guidance on AML-CFT issues. Throughout those years, Japanese government committed heavily to FATF work on virtual asset and stablecoin, including by nominating my JFSA colleagues as my successor of VACG co-chair. Since I wear FATF hat today, I would like to first extend a deep appreciation to Japanese government for their strong commitment and thought leadership in FATF work on stablecoin. Now, on the risk of money laundering, terrorist financing, and proliferation financing of stablecoin. Anonymity and decentralized nature of certain stablecoins, as well as nature of going beyond national border easily and quickly, is a risk similar to virtual asset in general, crypto asset in general. But stablecoin could be used more broadly by criminals, terrorists, and illicit state actors compared with virtual assets due to its price stability. Having said that, I'd focus other 2 key risks today. First, the risk of peer-to-peer transaction without involving intermediaries. In the case of physical cash, the risk of peer-to-peer transaction, which is basically out of the space of regulation, can be contained due to the limit of portability of cash. However, it's not true of stablecoins. Since this risk of P2P transaction of stablecoins include a fundamental challenge and risk to the current regulatory framework, I'll come back to this specific point separately later. And second risk of stablecoins I'd like to highlight today is lack of regulation and supervision of issuers and intermediaries of stablecoins. In many jurisdictions, regulation of stablecoin is absent, unclear, or not robust. Even in cases where there is regulation and supervision, they are often not implemented sufficiently. This brings a lot of unregulated players and regulated players, but with weak compliance. If stablecoins are used for payment and compliance by intermediaries in the ecosystem is weaker than that of the banks, unfortunately, that would bring a great benefit to criminals, terrorists, and illicit state actors and sanction evaders. Also, I'd like to mention the risk of stablecoin could be higher if its issuers are based in other jurisdictions. Now, what are part of work on stablecoins and how should we address AML-CFT CPF risk? First, FATF gave caution on the risk of stablecoin in its statement and clarified that FATF standards, especially recommendation 15 on virtual asset, applies to stablecoin and its service providers as early as in 2019. And also, FATF shared detailed risk analysis of stablecoin
in its published report to G20 in 2020. Second, FATF published detailed guidance on stablecoins and its service providers in FATF revised guidance on virtual asset and virtual asset service providers in 2021. Third, FATF has promoted the implementation of its standard and has monitored development of the stablecoin market and its risk throughout its virtual asset contact group. And last month, FATF adopted another dedicated report on risk and good practice of stablecoin at its plenary meeting, and it will be published in coming days. Finally, how could we address the money laundering, terrorism financing, and proliferation financing risk of stablecoin? I'd like to share 5 points very briefly now. First, implementing FATF standard on stablecoins. That means regulating and supervising issuers and intermediaries of stablecoins in a similar manner with banks, and require proper KYC and risk management, including the implementation of so-called travel rule. Second, exploring the opportunity of blockchain technology, both for supervision and for risk management. And third, international cooperation between supervisors. This is especially a key when issuers are outside of your jurisdiction. And fourth, public-private partnership. Public sector and private sector is not fighting with each other in this field. We are working together to combat the threat of criminals, terrorists, and proliferation financing. Fifth, addressing the risk before the launch of stablecoin and or before giving license or registration to certain service providers. So I will stop here. Thank you.
Yes, thank you very much. Thank you for your very comprehensive answers, and we are very much looking forward to the new report in coming days. And so we understand the risk and the policy responses taken so far, but from another perspective, for example, those who are seeking innovation, does regulation constrain stablecoin development, or can it actually encourage growth of stablecoins?
Thank you very much. I think that's a very good question. And first of all, I'd like to emphasize that FATF is a great fan of innovation. Actually, responsible innovation in our terminology. Responsible innovation, that's very important. The word responsible is a key here. And I strongly believe regulation enables stablecoin development. And first, by increasing trust in the industry and also in the regulated entity of the stablecoin ecosystem. And second, by increasing the clarity of regulatory expectation and also the clarity in terms of how much flexibility industry could have within the regulation. So to sum up, I think regulation will enhance the predictability of the industry and also enhance the trust of the industry. I think that's really important to enable stablecoin development. And we, throughout a lot of outreach we've conducted at FATF level with important stakeholders around the world, I think we share this importance of regulation and also the responsible innovation. Thank you.
Yes, thank you very much. So I think now we can have a broad picture of current landscape, including benefit, risk, and regulatory responses. So let us now move on from diagnostics to prescription. So the underlying question in this round would be, how can we build a healthy and resilient ecosystem for stablecoins in cross-border payments? So Professor Ueda, stablecoins are not only instrument to improve cross-border payments. However, they are already being used in practice. And even traditional financial institutions are entering this space. Compared with other instruments, what do you see as the key advantages of stablecoins? And from your perspective, What implications should governments and central banks be particularly aware of?
Thank you. I think depending on the people, the definition of the word stable coins are quite maybe different. And I myself sometimes a little bit confusing. So that first I have to say the stable coin in very broader sense, it's just some digital financial kind of tool that that value is fixed to legal tender, like Japanese yen or US dollar or euro. So in that sense, many things could be stable coin. So that here I just want to focus a very narrowly defined stable coin, which is backed by, have to be backed by the safe asset like government bonds. So on this very narrowly defined stablecoin, which is essentially so defined in the Japanese legal system as well as US Genius Act, I believe. In this very narrowly defined payment stablecoin, whatever we call, we have obviously a fundamental kind of concern from the economics point of view, because those are, if backed by almost all government bonds, then the funds raised by this into the stable coins just invested in government bonds, while the legacy alternative is usually the bank deposits. We all so far have been using bank deposits to transfer money, pay something, so that the bank deposits in economics terms is considered as money in a broader sense. Indeed, in a broader money we call M2, about in advanced countries, about 90% of M2, especially in like Japan, 90% is a bank deposits. So that if those bank deposits are substituted by a narrowly defined stablecoin backed by government bonds, a very safe asset, then the problem is functioning of financial systems. That's the question, because we call this disintermediation, by the way, in the sense that people's money, if it goes to bank deposits, then the bank uses those deposits to fund companies or make loans to firms. And those things, those flow of funds kind of become smaller and smaller if money goes to stablecoin, and stablecoin goes, that money goes to government bonds. So, however, we know, all we know is that in a capitalist society, a typical society, a company's activity, investment is a key factor of economic growth. So, in that sense, if the stablecoin become bigger and bigger and substitute bank deposit, that's essentially fundamental problem. It's a very fundamental problem. Having said that, there could be a little bit another stable coin could be, of course we can consider. It's just, if so, then why we don't just tokenize bank deposits? Tokenized bank deposits also value of $1 is supposed to be fixed to $1 legal tender. So it's in a sense, it's a broader sense of stablecoin, but we typically define it as a tokenized bank deposits. So the tokenized bank deposits kind of, I believe, better because it's utilizing current system, and the bank deposits amount is intact, so that those money goes to the used as loans to the companies still. So that's better in the sense of system, from the viewpoint of financial systems, biggest role to funding, to intermediate household savings to the companies, firms' investments. However, of course, the problem we know is that tokenized deposits are a little bit more complicated than the stablecoin. That's why we know that interoperability between, I mean, tokenized deposits should be already actually issued by some of each bank. The question is across bank interoperability is a question. And then, of course, across borders also another question. For that, I believe, obviously, there is a role of a central bank, because across bank is interbank market. So that, if the central bank can support those tokenized deposits by developing better interbank kind of clearing settlement system, which we sometimes call wholesale CBDC or tokenized central bank reserves, I believe. And similar thing could be developed internationally. That's all I already know, the BIS working on it. And so the BIS, IMF, or any other new institution could develop global settlement clearing better system to secure those interoperability. And then obviously this event is also, I think, supported by AMRO, right? So the AMRO could do, if those global institution is kind of a little bit far away, only within a region in Asia, ASEAN plus 3 maybe, can work on that too before a global institution become established. We could do it in Asia only too, I believe. And what still stablecoin have a bit some benefits over tokenized deposits is obviously, again, same issue. Double-edged sword issue, because if it's a tokenized deposit, bank knows who owns, who sent. So from the viewpoint of FSB or FATF issue, that's better, because it's definitely better technology tracing the money. So that's better for the AML-CFT point of view. But at the same time, again, some people, I believe not just criminal, but some people like anonymity or privacy. So those people still want to use stablecoin. So the question is how to distinguish criminals or the very truly those people who like privacy. It's a very, I think it's a difficult issue. I would like to ask actually Habuchi-san how to do it. And also, having said that, obviously we know this is also similar in a legacy technology. It's a very similar discussion has been done between the bank deposit versus money market mutual funds. Those money market mutual funds, even in Japan or US more, could be used as a base kind of money to pay bills and so on, right? So I think in the end we should not over-regulate to kill any of those development, because innovation is really important in any sector, especially financial sector. So we definitely need to secure financial stability, and also we have to deal with AMR-CFT issues. But at the same time, we also we have to be careful not to kill those kind of seeds of innovation, which could benefit us in the future. Thank you.
Thank you very much. Yeah, we really understand the macro-financial implication, but I think many of the audience, including me, would like to more about the different of the risks between, I'd say, local denominated stablecoins, local currency denominated stablecoins, and foreign currency denominated stablecoin like USDT, USDC. So how would the risks differ between them?
Yeah, I believe in some countries, one of my current research is actually Cambodia field survey. They are quite dollarized. So in some countries, we know already, in some developed countries, already using dollar for several, maybe 10 years or maybe 20 years or more, because their local currencies are kind of considered to be weak in a sense. So especially those countries, as well as maybe not those countries, but for the developing countries especially, the key question is if those better technology-backed US dollar or digital euro, whatever, become available on their smartphones, most likely, very likely, many people wanna use it maybe instead of the local currency. That is already, I believe, threat in some countries, even with legacy technology. And with better technology, obviously lower cost, high speed, those benefits of hard currency, digital stablecoin, or even in that case, bank token maybe, bank deposit token maybe it's the same thing. So those currency, we call currency substitution, become more and more threat, I believe, in many countries. And then question, of course, is that if those stable coins are issued in a jurisdiction, as Peter or Habuchi said, in a jurisdiction with weaker regulation or supervision, and as I said, weaker maybe fiscal backing, fiscal capacity of the government, then in times of crisis especially, those people using those things have trouble. That's again the issue back to this GC blah 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 issue. And then another issue is kind of it's similar to those. This is, however, I have to say, economists like academic economists always think about competition. Competition is usually better. So this is bad in a sense if the local, each country's, developing country authority doing little bit lax monetary or fiscal policy, then they might be taken by, those currencies may be taken by US dollar or other currency. But at the same time, this threat may be a good discipline to those countries to adopt better sound macroeconomic policies. So it's also kind of benefit. We can create more market discipline in the sense by not we, I mean those guys can make better discipline. So it's always pros and cons. At the same time, also we know, especially typically the freer capital mobility is better to many countries in terms of economic growth and innovation. So this stablecoin or any financial technology promote a freer capital movement is in normal times, I believe it's actually good for the economic growth. However, again, the problem is we sometimes have crisis, so that's inevitable. So that the problem is, I think there are, again, I've been saying the same thing, but there are two possible cases where capital control is truly needed. One is AML-CFT concerns about specific capital flows. The other one is when in crisis, capital flights may be starting. At that time, we know one of the tools is capital control, but in crisis. But in a stable coin, if it's issued in foreign countries, it's very difficult to control on this capital outflow in crisis. So that's something we have to think about globally, how to deal with those issues. But again, killing new innovation is not good, but somehow how to deal with it, better global supervision regulation is a way to go, I believe.
Yeah, thank you very much. So let's talk about regulatory design. Mr. Goodrich, from a cross-border payments perspective, what should authorities prioritize when designing stablecoin regulation? And in addition, based on the most recent FSB thematic review that you did, what challenges have been identified with respect to cross-border cooperation and information sharing?
Yeah, thank you for the question. So I think naturally, of course, I have to say jurisdictions should prioritize the FSB recommendations. But I think we understand, and we've done actually a couple surveys of over 70 jurisdictions that are part of our regional groups, as well as the FSB membership. And for the last 2 years, they've all identified AML-CFT financial integrity risk as the top risk for stablecoins. And what we found in our peer review when we looked at the development of regulatory frameworks across many jurisdictions, they normally follow kind of a three-step process. They first start with AML-CFT, and they establish a licensing and a transaction reporting framework. Then they address investor protection, consumer protection as kind of a second step. And then finally, the last step, normally they would turn to add on prudential requirements to their existing licensing framework. So while I think we would certainly want jurisdictions to prioritize the FSB framework, we recognize that there's obviously other risks beyond financial stability risk. And in stablecoins, I think in particular, the financial integrity risk can be very large, particularly if you're talking about a cross-border payment case where you're using stablecoins that are from another jurisdiction and you're engaging in cross-border transactions. You need to know the identity of who's transacting in that. You also mentioned a very good point on cross-border cooperation. This was another key area of focus of our peer review. And unfortunately, what we found is cross-border cooperation is often insufficient and fragmented across jurisdictions. There's a number of different reasons for that. The first, obviously, is many jurisdictions are still developing their regulatory framework. So there can be many jurisdictions still where they don't know who the competent authority will be to regulate stablecoins or to supervise stablecoins. They're waiting for that legislative action until they get the legal powers to start cooperating. The second issue that we identified was around the use of existing tools. Many jurisdictions pointed to the IOSCO MMOU, the Memorandum of the Mutual Memorandum of Understanding, which many IOSCO members use to cooperate and share information on enforcement cases, on market abuse cases, but it's not being used to share, or it wasn't designed to be used to share supervisory information, to share data around financial stability or information sharing in that sense. So there's a clear gap in terms of how authorities can share information when we're dealing with stablecoins. Another kind of piece of this challenge is that in many jurisdictions you see different authorities that are supervising or regulating stablecoins. In one jurisdiction, it could be the central bank. In another jurisdiction, it could be the prudential banking supervisor. In a third, it could be the securities regulator. And in a fourth, it could be an entirely new supervisor created just for stablecoins. So not only is it cross-border, it's cross-sectoral. And many supervisors don't have the tools yet to cooperate with each other across borders and across sectors. Now, some jurisdictions can try to cooperate internally first and find for example, the central bank in one jurisdiction could cooperate with their securities regulator in their jurisdiction to then cooperate with the securities regulator in another jurisdiction. But a lot of times the legal barriers to do that can be very high and it's very slow. So I think cross-border cooperation is certainly an area that we're calling on jurisdictions to leverage the existing tools they have, to think about proactive ways to engage with other jurisdictions. And then, obviously, for international organizations, the FSB included, to start thinking about ways and tools that may be needed to fill some of those gaps.
Thank you very much. Yeah, cross-border cooperation is definitely important. So, Mr. Habuchi, as you explained in the first round, one of the major challenges for regulators is peer-to-peer transactions conducted through unhosted wallets that fall outside the scope of traditional regulation. How do you think this issue should be addressed? In addition, do you have any practical advice in terms of mitigating money laundering, terrorist financing, and proliferation financing risk?
Thank you very much for the question. Now, I'd like to start by elaborating why the risk of P2P is important, and then I'd introduce how we could address that risk in a practical manner. First of all, why the risk of P2P transaction is important, and this is something to think about for policymakers. I would say there are two reasons. First, this could undermine the effectiveness of the current regulatory framework. And the second point is because of, irrespective of that, we don't know the size of the P2P, whether it's growing or shrinking. I'd like to elaborate both points a bit more in detail. First, P2P transaction could undermine the effectiveness of the current regulatory framework. Let's imagine that stable coins such as Libra, as originally envisaged, will be widely adopted around the globe. And if that kind of stable coin could be used for the purchase of goods and services on that particular platform without on and off ramp with fiat currency. So in the case of the current regulation, the risk management and proper KYC is expected at the point of intermediary. But if goods and services could be purchased with stablecoin, without on and off ramp, with fiat currency, it is very difficult for intermediaries. It is very difficult for to make this control through intermediary work as effective as it is now. So we need to closely monitor whether such kind of stable coins are emerging or not. And it is better to address the risk in advance. And secondly, the size of P2P transaction. So it is very important to monitor the size of P2P to evaluate the risk, what I mentioned just now. But unfortunately, we don't have a good idea on the size and proportion of P2P transaction. We don't have statistics, like IMF statistics on crypto asset and P2P transaction. Actually, FATF conducted research on the size of P2P transaction 5 years ago, and it's published in the second 12-month review report of FATF. But at that time, we cooperated with several leading blockchain analytic companies, and those are the leading blockchain analytic companies around the globe. But the result, the number they gave us to FATF range from like 10% plus to 70% plus, for example. There's a wide range. I think their technology is improving these days, but still we don't know for sure what will be the risk, what are the current risk, and what will be the direction the risk is going. So I think we need to aware that we don't have a perfect knowledge on the size of P2P transaction and its risk. And then how we could address the risk of P2P transaction. I'd like to share the 4 points. The first point is implementing current regulation and supervision sufficiently, including the implementation of the 12 rule, and also require intermediaries and issuers of the stable coins to conduct proper checks and risk management when they transact with unhosted wallet. By this, we can ensure that at least we can control the risk when P2P transaction starts and P2P transaction ends. So this is the first way of how to address the risk of P2P transaction. The secondly, we can use the opportunity of blockchain analytic tool. By using the, this is related to the Ueda sensei's point on how to distinguish between criminals and innocent citizens. So by using the blockchain analytic tool and doing some network analysis, with a certain probability, we can identify where is the illicit actor, where is the sanctioned entity and high-risk jurisdiction in the network of the transaction. So I think this is something we can take advantage of. And third, the control before the launch of stablecoin is very important. And ultimately, if the risk can't be addressed to the sufficient level, it is one possibility that authorities will not allow such a stablecoin to be launched in the first place. And also, if if we can use a smart contract, we can have better control by issuer. For example, the issuer of the stablecoin can prepare a ban or a freeze function in their stablecoin. And also, they can equip whitelisting and blacklisting function in their stablecoin. By doing that, once the stablecoin move to the illicit actor, they can ban or freeze that stablecoin, and also by using the whitelisting and blacklisting function, they can prevent their stablecoin being moved to the illicit actors. And fourth and last point is continue monitoring the space, the size of the P2P transaction and the risk of the transaction. And also the public-private partnership and the exchange of views among authorities is very important. Thank you.
Thank you very much. Yeah, we now clearly have a view of how we can regulate the stable coins. But can I add one point about the stable coins that are issued issued outside the jurisdiction? So Professor Ueda explained the risks, and so I'm very interested in hearing from both of you, Mr. Goodrich and Mr. Habuchi, on how authority should approach the risks of stablecoin issued outside the jurisdiction.
Sure, thank you. No, this is definitely a critical question, policy question for many jurisdictions, given we know over 99% of the stablecoins today are pegged to the US dollar, and they're highly concentrated in less than 5. So for most jurisdictions that are dealing with developing a stablecoin regulatory framework, they're going to be dealing with a stablecoin that's a foreign currency, and they're going to be dealing with stablecoins that are likely issued outside their jurisdiction. So this is definitely something they need to think about and consider. I think what we've seen so far is generally two approaches. Some jurisdictions are kind of bifurcating and creating a different regulatory framework for domestic issued and domestic fiat currency stablecoins, and then a separate framework for foreign denominated offshore stablecoins. And then the second type of approach would be to just require all stablecoins to be licensed in the country, to operate in the country, and that's basically what MiCA does in the EU. An example of the first approach, for example, would be in the UAE, where they have a separate framework for dirham payment tokens, which are allowed to be used for real economic activity. And then they have a separate framework for foreign denominated stablecoins, and those are limited to only be used for kind of crypto trading. So you can't use a foreign stablecoin in the UAE for real economic payment activity. But it's important to think through these, and each jurisdiction might have different reasons to go for different approaches, but definitely to think through how they're going to deal with these foreign issued stablecoins, whether you're going to require a local subsidiary and a local license, or are you going to recognize another license from another jurisdiction? Do you have the capabilities to cooperate with that authority? And there may be differences in terms of which stablecoin issuer you're talking about. It may be more challenging to cooperate with the supposed home supervisor if you don't know where they're located, if you don't know who you need to talk to. And that's obviously, I think, a current issue with one of the very largest stablecoin issuers. Another key factor is also to think about how you want to regulate the listing of stablecoins on the domestic exchanges. This is another key avenue that stablecoins can come into your jurisdiction, and something we looked at in our peer review, and there's a range of approaches here, and it really requires cooperation between the central bank or the supervisor that will have responsibility for payments in stablecoins, and often the market regulator that is supervising the trading platforms of crypto assets. And you want to make sure they're cooperating and that the central bank or the payment regulator is aware if foreign denominated stablecoins are allowed to be traded freely on the trading platform, or if they work together and have certain restrictions or minimum requirements. For example, ensuring that before a foreign stablecoin is listed on the trading platform, that the authorities in that jurisdiction understand, can we cooperate with the foreign supervisor? Do we understand the implications of allowing this? And in some cases, we found that was not happening, that cooperation was not happening. And then I would just lastly point out, so we covered this in our peer review and that we just mentioned in October of last year. In July 2024, we also did a separate in-depth report on cross-border supervisory issues for stablecoins in emerging market developing economies, where we really dived much deeper into this foreign stablecoin issue. And there's a range of discussion in there that I would encourage everyone to take a look at.
Thank you, Mr. Habuchi. May I turn to you?
Thank you. I think I'd share most of what's being introduced by my FSB colleagues, but 2 points very quickly. First, I think, again, the cooperation between authorities, the authorities of home jurisdictions of foreign issued stablecoins and authority of the host jurisdiction, the cooperation is very important. So I think this could include in-depth exchange of views between authorities that could be facilitated by memorandum of understanding and or supervisory colleges where relevant. And the second point is this is very important to ensure that there is no or decreasing number of non-compliant jurisdictions and non-compliant stablecoin issuers and non-compliant stablecoin intermediaries. So it's really important to ensure that all the jurisdictions and relevant players in the market are complying with FATF standard and other relevant regulations. Thank you.
Okay, thank you very much. The clock in front of us says that we only have 5 minutes, but I think in my clock, so we have still 10 minutes. So, so let us begin to bring the discussion on future outlook. So Professor Ueda, looking ahead, what do you see as the most important macro financial issue that policymakers should monitor and address these risks as stablecoins and other digital payment solutions continue to evolve in cross-border payments?
Thank you. Well, it's a stablecoin in a broader sense or narrow sense. It's anyway, it's fixed to a legal tender. So in the end, it's really, especially in this cross-border thing, it's a threat of currency substitution. Is a kind of threat, I believe, for many developing countries. I think they feel it seriously. Then, but then the fundamental question is how to obtain sufficient trust on your own currency in each for each authority. That's the key. In a sense, in other words, it's a weak currency problem is the key how to address. But then, well, in a technology for money has been changed from metal, paper, electronic, and blockchain. But most likely, the essence, objective has been the same: how to keep the value of currency. Actually, so that's a macroeconomic policy area. Maybe the IMF people here think it's all about FSB and the FATF issue, but it's actually, if it's an issue of keeping the value of currency, that's the issue of sound macroeconomic policy, monetary and fiscal policy, essentially. So I think that's increasingly more important, as I said a little bit more, because advancement of digital currency and digital technology and even AI, we now know many people, ordinary people, can have access to very good advice from generative AIs, so that also have a very good access to any information regarding where to invest, which currency we should avoid, for example. Those information become available and the good advice coming from AI, and then everyone can quickly move money using smartphones. That means currency, I would say currency competition definitely will become fiercer than now. That means each country needs to be more careful dealing with preserve currency value with sound macroeconomic policy. In that sense, probably, I believe IMF recommendation should be also updated given this reality. That's my sense.
Yes, thank you very much. So, Mr. Goodrich, what do you see as the key priorities for international cooperation in the area over the next few years?
Sure, so I would highlight maybe two key things. So first is obviously filling the gap of information sharing and cross-border supervisory cooperation. As more regulatory frameworks come online, as more tools are developed, I think supervisors really need to share more information. We need to be more proactive. I think given the kind of borderless nature of stablecoins and the global nature, it's really, everybody needs to work together to have effective supervision and oversight of these arrangements. And no one can do it alone, so we have to be in a place where we have the tools to share information and help each other achieve supervisory mandates. The second key piece I'd say is actually around disclosures. I think even today, there's a lack of information disclosed by many of the largest stablecoin issuers. Even if you look at USDC, which is presumably kind of more pro-regulation than its larger competitor, it's still difficult to know in a country where you are, what rights do you have? Which legal entity are you facing if you're redeeming? Do you have the same rights as someone in another country? Where are your reserves located? Do you have access to those reserves, or are your reserves in a different country? So even for these larger stablecoins, how they're structured and where they operate, who their supervisor is, what different licenses mean if they have on their website 5 different licenses, what can they do with those licenses? Where are they operating from under those licenses? So it's really still not clear, and we need more disclosure on some of those larger players.
Yes, thank you very much. Mr. Habuchi, how can policymakers and supervisors stay ahead of emerging risks while allowing responsible innovation to continue?
Thank you for the question. 4 points very quickly. The first, I think the AML CFT by design is very important, and it's about how to address the risk before the launch of the certain stablecoin, and also by how to analyze the risk in a forward-looking manner. The second point is the importance of cooperation, public-private cooperation, and also cross-border cooperation, including between authorities. And third point is monitor, learn, and adapt, because this is a very evolving market, and continuous learning and monitoring is very important. And fourth, I think stablecoin phenomenon is not happening in isolation. As Ueda Sensei mentioned earlier, there's stablecoins, tokenized deposit, and CBDC. So I think we need to look at both opportunity and risk of each stablecoins, tokenized deposit, and CBDC, and think about how we can create a better future of the cross-border payment. Thank you.
Yeah, thank you very much. So we are almost running time. So as we have, so we have seen that stablecoins raise complex issues, macro-financial, regulatory, and financial integrity related. So the key takeaway for me is that outcomes will depend not only on technology, but on policy choices and international cooperation. So with coordinated and risk-based approaches, there is a way to strike the right balance between safeguarding financial stability and encouraging responsible innovation. I hope today's discussion contributes meaningfully to ongoing policy discussions in the ASEAN +3 region and beyond. So thank you very much for all the distinguished panelists. Please join me in giving our distinguished panelists a warm round of applause.
Okay. Thank you very much to our moderator and distinguished panelists for a very engaging discussion. Please can I invite you just to stay on stage quickly, and we'll take a little photo. And for the rest of us, we're going to have a short break now, get some coffee and recharge our batteries. So the session will resume at 10:15 a.m. sharp. Thank you very much. We're about to start in a minute, so I'd appreciate it if you can please take your seats again. You're welcome to bring your coffee and any snacks back to your table. Thank you. Okay, welcome back, everyone. Welcome back. We're now going to proceed to session 2, Enhancing Payment Connectivity in ASEAN Plus 3, Opportunities and Challenges. Now, across the region, initiatives such as FPS linkages, QR code payment connectivity, and central bank digital currency experimentation are reshaping retail payments and financial integration. So moderating this session is Mr. Prashant Pandey from AMRO. Please can I invite Mr. Pandey up on stage to introduce his panel speakers. Thank you.
Thank you, Aziz. And after a very informative panel discussion on stablecoins, it's time to probably shift the focus a bit to the region at ASEAN Plus 3. This session will specifically look at the payment connectivity within ASEAN Plus 3, and a lot of the developments, especially on the retail side, which have happened in the region. I'm honored to present with you a very esteemed panel with me. To my left, we have Mr. Andrew McCormack. He is the CEO of Nexus Global Payments. He has served as the center head for BIS Innovation Hub in Singapore and has been involved in a number of well-known CBDC projects like Project Jasper, Dunbar, and of course, now he's leading Nexus, which is another very important project for global payments. Then we have Mr. Ryan Rizaldi from Bank Indonesia. He is the executive director responsible for payment system policy and oversight. He has been with BI for about 25 years and has contributed to Indonesia's retail payment standards, national payment gateway, and also the payment systems blueprint. Finally, we have Ms. Julian Hung from who is the regional head of payments at Grab and is responsible for the overall strategy and growth priorities of Grab's payment services in the ASEAN region. She has launched GrabPay in Malaysia and has also served as a project lead for Grab's digital banking application. So welcome to all the panelists. Hope we have a very engaging discussion on the retail side of cross-border payments in ASEAN Plus 3. First question, which also ties into the topic displayed, is the opportunities or the advantages of these cross-border initiatives. So maybe I'll start with Andrew. Very quickly, the two biggest advantages or opportunities which these retail payment connections in the region have presented, what are the top two advantages that you see?
Thank you very much for the question. Thanks for the honor of the invitation. It's my first time in Japan, and I'm very thrilled and excited to be here. So, and I do appreciate that we're starting with the benefits as opposed to the challenges, because it's nice to be optimistic and future oriented. When I think about the benefits of improving cross-border payments in particular, it's impossible for me to distill it into two, honestly, because it's a diverse ecosystem of stakeholders, right? And I would probably boil it down to at least four groups. One is consumers, the other one is merchants and businesses, of course banks and payment service providers, and then last but not least, public policy objectives and policymakers in general. So for consumers, I think we're all well used to, especially in the ASEAN region, convenient, fast, cheap, secure, domestic, instant payments. And no one I've ever met has said they want their payments to be slow and opaque and expensive. So it kind of logically does then lead to the question, how do you extend those services across borders, and how can you extend those benefits that you've enjoyed domestically, in other use cases, specifically remittances and cross-border QR type interactions that would support tourism. So that would be my first answer for the consumer group, let's say. For the merchants and businesses, very different subgroups actually, but for merchants, again, QR acceptance has materially lowered the cost of accepting digital payments. It removes the operational overhead and risk of processing cash in a business. And so again, to the extent that those use cases are well supported, to allow more tourists to use a QR code in a given country, especially where tourism, where many of the countries in this region are focused, certainly just grows the pie for merchants, which I think is a positive. Businesses, I guess, is all about trade flows and making sure you can have more real-time, just-in-time type of trade arrangements, and that's a critical thing. And those are higher value transactions, perhaps less retail focused, but an important use case certainly from a regional economic development perspective. Banks and PSPs, very critical, obviously, to everything in payments. And I'd say largely, when we're talking about things like Nexus or regional arrangements in general, banks and PSPs, these types of things will help level the playing field to some extent. Certainly there's very capable fintech players, and some of them are on the stage here with us today. It's actually very difficult for banks to compete with those types of services. And so to the extent the infrastructure can be improved to support, smaller or medium-sized financial institutions to better compete and offer better services to their customers is one angle I think about. And then last but not least, of course, the policymakers. I think the G20 targets are always the North Star in terms of how to improve cross-border payments, and those are well defined. Financial inclusion would probably also be another key dimension there. So I'll stop with that, but those would be sort of the top of mind benefits for each of those constituent groups.
Thank you, Andrew. Ryan?
Thank you. First of all, thank you for having me. It's a good opportunity to share. I just would like to add everything that Andrew just said, because I agree with you. Just to add some more on the macroeconomic reasoning on why this is important for the ASEAN plus 3. So it will be very straightforward, I guess, to have a faster, convenient, secure, reliable, affordable payment interconnectivity across the ASEAN plus 3, because this ASEAN plus 3 is a massive market size. It is accounted for 28%, in my notes, 28% of total global final demand, exceeding the US. The US is only 26%. And it's a high trade openness across the countries in ASEAN plus 3. So the total trade of ASEAN plus 3 is nearing 50% of its GDP. So I guess to have efficient cross-border payment will provide a big benefit for the region. And because of that, I believe that this efficiency in the cross-border payment can be a concrete use cases for our long-standing vision of deep economic integration. We already have Chiang Mai initiative, but I don't think that, I do think that we can improve this initiative to be, to have a more concrete use cases and to have interconnectivity, real interconnectivity in cross-border payment will be a good use case to make this initiative more concrete. I will stop right there. Thank you. Thank you.
Thank you. Julian?
Yeah, so thank you for inviting me to be a part of this event and panel. So thanks to AMRO and IMF. Really proud to represent the private sector. So I hope I do a decent job. It's really hard to, I echo everything that Andrew and Ryan said. And, recently we have an Oxford economics report that recently published a report saying travel is entering a structural growth phase, and APAC is actually gaining global outbound share. They anticipate about 40% of global outbound will be in APAC by 2035. And also that 75% to 80% of APAC outbound actually stays within the region. So actually the ASEAN Plus 3 is a really important program and connectivity network for this region. We also have new travel middle class households who are starting to travel as well. So it's really driving this growth. So thanks, Andrew, for laying the groundwork. Yeah, level playing field is important, and I think that's the biggest benefit of one of these these payment rails. It allows participants such as ourselves to actually start providing new services to new segments, right? And I think with these payment rails, also getting access to national QR programs and P2P rails, it actually allows access and cross-border payments to a segment of micro merchants, and they might not even know that these cross-border payments are happening. They just see it as a user scanning their QR and making a payment, and that is really powerful. Grab is a merchant that actually we do see a high volume of travelers, so I do empathize as to how expensive foreign cards are. Foreign card MDRs are extremely expensive, and also for consumers, issuers actually charge fees between 2 to 6%, by way of FX markups and conversion rates. And so providing easier access to users allows, and to consumers actually, encourages them to make cashless payments instead of reverting to cash. And they typically do that not because they like cash, but just because the cost of a card is actually very prohibitive. So yeah, I believe that's the biggest benefit. So access and costs are one of the biggest benefits that will actually help to drive cross-border digital payments.
Thanks, Julian. So for me, the key takeaway is that we have 3 panelists, one from the private sector, one from the public sector, which is taking the lead in the bilateral linkages, and we have Andrew, who is working on the multilateral connectivity. And all 3 of them have similar but still very different approaches to this. So if I have to ask a question that now it's a mosaic which is developing for cross-border payments, and we have 3 different approaches to solve the problem. So where does each of yours approaches, multilateral, bilateral, and private sector, fit into this? Maybe Julian, you can continue from where you stopped.
I actually don't lean to any one specific, and then I'm more than happy to participate in both private, bilateral, and multilateral networks. There's pros and cons to each. The way we think about whether we participate is, number one, where do our consumer flows or our merchant flows largely reside? And in some of the government-to-government networks, it makes sense because a lot of the flows are intra-SEA. It's also about speed to market. So by participating in either bilateral or multilateral networks, it gives us speed to all the corridors almost immediately. Maybe a slight benefit to multilateral is that it actually connects multiple corridors with one single integration. So that reduces the complexity altogether. But we actually are open to all, but we decide based on the best flows, and we really put our consumer needs at the forefront of these decisions. And also a large one is costs, commercials. So that's a big one for us, because the moment we can actually reduce costs for our consumers, that's where we believe the biggest advantages and leverages are. And it's also, how do we provide a differentiated proposition to these people?
Thanks, Julian. So Ryan, where do the bilateral initiatives between different countries. We have seen a lot of these bilateral payment linkages. How do they fit into the payment solutions? And given that we also have a lot of the multilateral initiatives coming up, how do you see the bilateral initiatives evolve going forward?
Thank you for the question. So I guess it will be no doubt that multilateral is more efficient way to do this cross-border interconnectivity, because it is, much more easier. I mean, to be connected, especially when we talk about ASEAN Plus 3 in the context of ASEAN Plus 3. I guess we can agree that multilateral will be the most optimal solution to have. But as Julian said, somehow we need to think about the speed to the consumer, how people can felt the benefit of digitalization immediately, and how people need the actual solution to have a real benefit of cross-border interconnectivity. So thinking about that, I do see that the multilateral is more complex rather than bilateral. We agree that we will go into that direction in the medium to long term, but the challenge is to how to provide the solution for the society in the short run. So I guess bilateral interconnectivity will be more reasonable solution to have. The challenge would be on how to align between the existing bilateral interconnectivity with the multilateral going forward. This is something that we already done in Bank Indonesia. We have a lot of corridor, bilateral corridor, especially on the QR side, QR interconnectivity. The use cases is more on the person to merchant. It is interconnectivity at the front end, and we are preparing from the beginning that because we also participate in Nexus. So from the beginning we start to get ready with the next agenda of this multilateral, and hoping that this bilateral corridor that we already have can be aligned with the future multilateral interconnectivity that through Nexus. I will stop right there.
Thank you. So, Andrew, of course, the multilateral initiatives are, as Ryan mentioned, it's a very efficient way of connecting multiple players. So, in your opinion, going forward, how would the multilateral connections probably coexist with bilateral, and how can they be used by the private sector to leverage and provide more products to the consumers? Any thoughts?
Yeah, thanks. Obviously, this is a biased opinion coming from my side. But look, ASEAN Plus 3, the region is truly leading the world in payments innovation. Whether it's on the domestic kind of adoption curve, whether it's on the fintech side, or of course bilateral connections and now even multilateral arrangements that are coming up. I can't think of a better place to incubate these types of projects and truly bring them to market. So we'll see. The answer is no one knows exactly how these different streams will merge or not. But certainly from our perspective, we're very grateful that the region sort of invented some of these innovations, specifically these bilateral arrangements. The first one I was aware of was Singapore, Thailand. I'm not sure if it is the first, but that's the first one I was aware of. And certainly that demonstrated the art of the possible. It does provide for sort of speed to market in terms of, proving a POC or a pilot and actually making it live relatively quickly. But if you already see some strain emerging in the countries that are starting to do 1, 2, 3, 4, 5 of these things, it's not truly a scalable architecture for a system. Payment systems are network businesses, and if you don't have a positive network effect inherent, it's very, very difficult for them to scale from a commercial perspective or even from an operational perspective. So if you want to go fast, go alone. If you want to go far, go together, I guess is the cliche. But I think there's some truth to that, actually. And so certainly that's the Nexus view on why something like Nexus might be relevant in the not too distant future. I certainly wish we could have gone faster. The project was born at the BIS Innovation Hub in 2021. And so the idea was pretty clear pretty quickly. Frankly, not a lot has changed in terms of the design. We've refined it from a technical perspective. We've put a lot of work into the rule book now. That's a key ingredient for sure. Having a standard scheme rule book is the backbone for any payment infrastructure and certainly arrangement. And that's really the focus of our work at this point in time. But really bringing this capability to market, arguably could have and should have been done quicker, and that would have certainly, I think, alleviated some of the fragmentation, I guess, is what's probably the right word. But we'll see. Our goal is to bring this to market in the next 18 months, and then we'll certainly work with all our stakeholders to move things forward. And again, look, the private loop, private closed loop systems are also extremely impressive in achieving massive scale, especially in the digital wallet space. But I guess fundamentally those are different in the sense that they're winner-take-most type of situations, right? And so once something is kind of dominant in the market, it is indeed potentially a monopolistic proposition. And so where you look at an infrastructure play like Nexus, it's really meant to be scalable, one API, one connectivity, one rulebook, but really accessible to all manner of licensed PSPs. I think the earlier panel talked about also, responsible innovation, and we'll talk about stablecoins later, but the idea of having a compliant by design arrangement that has good governance, has clear, we're a not-for-profit, for example. We work with our regulators. We are regulated. It's not a regulatory arbitrage situation at all. It's the opposite, and it's really meant to, again, level that playing field and provide an open loop capability that will work for a wide range of constituents. And that's our objective, for sure.
Thank you, Andrew. So just following up on this theme, you said that this was conceptualized in 2001, and it will probably be operational next year. 21, sorry.
Didn't take that long.
Yeah, sorry.
Yet.
Yeah, so what are the biggest challenges that countries have faced when they have to start integrating with Nexus? If there are some broad categories of issues that you have noticed with the countries, maybe you can highlight those?
Yeah, so really there's three main categories. One is technical, one is rules and governance, and then the third is sort of commercial, right? And so in each of those broad areas, obviously, there is a lot of consultation required. So one of the interesting things about instant payments, while they have flourished in Indonesia, actually Japan, interestingly, for the payments geeks in the room, had the first instant payment system in the world in the 70s. So, very much a leader in the payment space going back to the mid 70s. And so the challenges are many in the sense that on a technical level, you have systems that are 40 plus years old, that are, based on certain message standards or technologies that are perhaps not as modern. You have modern systems that chose to use ISO. You have modern systems that chose to use card-based protocols. So you have a hodgepodge of, the technical landscape is very different across all different countries, all successful, but super different. And so the challenge for something like Nexus, and one of the reasons we go a bit slower, is we have to sort of standardize and normalize and deal with all that complexity. So that's one. On the rulebook side, as I mentioned, we are investing heavily into making sure the rulebook is sort of airtight. It covers all of the operational responsibilities, all the dispute and liability situations that may emerge. consumer protection aspects. Everything has to be in there and clear. And so it's a very consultative process. It's a very, and it's not like a, bilateral, you get to sort of basically write a contract with the counterparty and decide how you want to answer those questions for two different, say, regulatory environments. We get to do it 6 times, and now hopefully 7, and we keep growing. So it's heavy lifting on the rule book for sure. Governance is also key in terms of making sure all of our owners and stakeholders, can feel confident and assured that we're making the decisions in the best interest of the scheme. And then the last one is commercials, right? So every market practice is different. What the market looks like in Thailand is very different than what the market looks like in India versus all of our other countries. And so, there's obviously a certain amount of effort put into making sure that the value proposition resonates in all of these different markets, regardless of the starting point. And can't get into too much more detail, but those are the main areas, yeah.
Thank you. Going back to Julian, because there are also a lot of the wallet and super app connectivities which are happening on the private sector for cross-border payments. Does scaling up these connections face similar issues as what Andrew has mentioned for countries to plug into, say, Nexus, or there is a different set of challenges which the private sector faces?
Yeah, so Grab is a large supporter of driving digital payments. We believe it's really important. Cash is actually seen as less secure. And it makes it actually a dangerous situation for our drivers because they, every time they accept a cash ride, they're holding cash and it makes them highly susceptible to being robbed. So we're actually really big proponents of driving down, the acceptance of cash. But actually a large amount of cash is actually from travelers because of the cost of cards. So they're very cost sensitive, right? Grab has been very fortunate to be able to join national payment programs in certain markets in the region. In Indonesia, OVO is a participant of Curious as well. So it actually has given us the ability to have access to payments connectivity, both domestic and cross-border. So I think when we're thinking about whether it's bilateral or multilateral networks that are being developed, that we ensure that access is given to a wide spectrum of players and not just limited to traditional banks or the large FIs. Because when you do that, you actually provide a range of players to give access and ability to create actually new products. And they are actually targeting a completely different new segment of users, micro SMEs, and also consumers that, traditional banks might not necessarily be serving today due to the cost constraints of being able to serve these segments. We also know that certain merchant segments don't accept cards because it is very costly. Foreign card MDR is very high. So that gives us the ability to actually create differentiated products for these merchants to actually start accepting cashless payments. Not just domestically, but also cross-border. So the fact that some of these payment links, cross-border payment links, connects to the domestic national QR is extremely important. I think if we think about the high traffic traveler flows when people are traveling, it's actually in the segments where the markets or the hawker centers that actually only accept QR, and they would never accept you never see a card terminal there. So I think that's why it's very important. I think. Andrew, you actually touched on an important topic, which is technical constraints and resources. So at Grab, whilst we are a tech company, unfortunately, our tech resources are quite limited. So when we make a decision as to which network to join, obviously would be the ones that will give us access to a wide range of different payment corridors with as minimal tech investment or one-time integration to multiple corridors is extremely important, but also ease of settlement and reconciliation as well, because operationally we want to make it easy for our back office teams to be able to do that, and making sure that the money flows into the consumers in a more stable and reliable manner as well. Another potential challenge that we see is user education. And even though, for example, the Singapore-Thailand network that you mentioned, or even between Do It Now and PromptPay, right? actually users don't really know this, and it actually requires wide education across multiple parties in the industry, both from the banks, also from e-wallet players where we can, but also with in the merchant as well. How do we make sure our merchants know what are the type of payment modes? And we are actually a participant of, we actually also accept Alipay Plus wallets in Singapore through the GrabPay QR. And it's really hard to educate a user that Alipay Plus is actually not just Alipay wallet. So those kind of education points are very important. What I believe the card schemes have also done really well, which I do applaud, is that they've actually built strong frameworks around fraud management and chargeback. And that actually makes a consumer feel more secure when they're making cross-border payments. And I think that's something that, as we build our alternative payment networks, that's something we have to think about in terms of how to create a robust framework and protect our consumers' funds. Because in most of these QR, actually, some of this is actually access to a customer's direct bank account. And so how do they feel secure when they're making these cross-border transactions, that their money is going to be safe and that the transactions are secure as well? So that, those are the important challenges that we need to overcome.
Thank you. That's actually a very, very wide range of issues that you mentioned. So going back to Ryan, so when you look at a lot of these the private sector initiatives for payment connectivity, and of course the central bankers are also doing this, what are your policy priorities when it comes to, say, regulating a private player for payments? Any philosophies, any principles that you have in mind when you give permissions for related to access or anything else? Yeah.
Okay, thank you for the questions. Yeah, Bank Indonesia's policy toward the non-banks players is very open. So we open the accessibility of non-bank payment provider in Indonesia, including for cross-border interconnectivity. That is the main principle. But I guess either for banks or non-banks, I guess when we talk about cross-border payment, it is always be related with the capital flows management from the macroeconomic point of view. So somehow some arrangement would need to be there. So that's why we central bank stands in front of all those initiatives. We are trying to do that, making sure that all the cross-border interconnectivity does not counterproductive for the whole economy. So our vision, our future policy that we would like to reach is to arrange the connectivity in and out the Indonesian economy. So that's why we always try to push all the cross-border interconnectivity within the government to government as an umbrella policy, and that umbrella policy will become the base for the private sector to enlarge their business activity. So. So that's explain why many cross-border interconnectivity, especially coming from the QR interconnectivity, will start from the central bank agreement as an umbrella. And then with that, we bring our private sector to interconnect with the our other countries. Yeah. So I think that's. I would also like to make some response to your question about the bilateral adoption. Yeah. Okay. Yeah, I guess the beauty of the bilateral is actually on its simplicity. We take, I mean, maybe 1 year to connect with other. Practically 1 year it needs to connect with other country, and thankfully in Indonesia we have a QR common standard, and it becomes a key advantage for us when we talk about cross-border interconnectivity. Whichever country that connect with Indonesia with QRIS, the QR Indonesia standard, it automatically will be connected with almost 30 million merchants in Indonesia, and almost 60 million users in Indonesia. So when we talk about adoption, when we already have a single common standard in QR, it is very easy to reach huge volume and accessibility, including in cross-border. So what I'm trying to say is effective cross-border interconnectivity cannot be detached from domestic interconnectivity. And this common standard will play a lot of important role to bring the success. And the other way to think about bilateral, it is more flexible in many ways, including on how to handling the geopolitical constraint somehow, and targeting specific economic use cases, and some sense of isolating problem, because there is a lot of problem when we deal with cross-border payment. I do think that multilateral will be much more challenging in terms of dealing with this kind of problem, and bilateral will provide more opportunity for us to deal with provide some agility on how to respond to this problem. But again, when we talk about the efficiency of connectivity, there is no question multilateral will be much more dominant rather than bilateral. The question is how to bring this benefit as soon as possible to the general society. Thank you.
Thank you, Ryan. That highlights two very important points. First is the speed, and second is resilience, which is very critical for the cross-border payments. Probably I'll move on to the more forward-looking stuff. Tokenized money is something which is getting a lot of attention of late. We already had a very insightful panel. Thank you for that. But again, coming back to the context of ASEAN +3 and cross-border retail payments, maybe I can start with Andrew. That any quick thoughts that how foreign currency as well as domestic currency, stablecoins or CBDCs can play a role in enhancing the cross-border payments in the region? And do you see any risks associated with them?
How much time do we have?
Okay.
You know, I've been around the payments universe now for a dozen years or so, and kind of have seen various evolutions of this tokenization conversation, and even in some ways been guilty of promoting, or at least, you know, encouraging exploration in that space, which is well and good, I guess. But, you know, candidly, and this is my own personal opinion, just to be super clear, you know, after about 10, 12 years of trying to, you know, shoehorn CBDCs into reality, it doesn't seem to be happening, like, just to be blunt. I don't see a lot of traction in the real world, and I think the resistance comes from various different places. So I guess that conversation is sort of quieting down, but of course stablecoins have now come back for another victory lap in terms of, okay, maybe that's a path forward for tokenized kind of deposits, stablecoins, commercial bank money, etc. I think the prior panel did a good job of framing a lot of the risks, which are many, to the extent that it's regulatory arbitrage as the primary core of the value proposition. I don't see that as a sustainable competitive advantage in the long term, because it's certainly maybe something that in the short term attracts a certain amount of flow, but how does that translate into scale, mass market adoption, and customer trust and assurance? Where's the rule book going to come from? Who's going to write the scheme rules, and how is that going to be governed? All the same stuff we're dealing with, to be honest. So not to say it can't be done, but I don't lose a ton of sleep over it in reality. So I mean, those are my kind of initial thoughts, and then frankly, if you tokenize one half of the ledger, so you've tokenized either the asset side, but not the liability side is stuck in the traditional core system, I'm not entirely sure how that plays out either, to be honest. Now you need a new clearing system. If I have a Walmart stablecoin and a JP Morgan stablecoin and a mom and pop shop stablecoin, as a user, that's a hot mess, and I'm not interested in that even as a payments geek, and good luck explaining that to my wife. So, there's a lot there to unpack. That's the skeptical view, just to provoke the conversation. But I think, there's a lot of growing up to do in that whole arena, to be blunt.
Thank you. That actually sets the next question for Ryan, because as it was highlighted in the first panel also, different authorities have different approaches towards, say, stable coins, either denominated in their own currency or a foreign currency. So how should a central banker think about these opportunities and challenges which can come through? This is something which is already developing. So what are the important points as a central banker that you should pay attention to these developments?
Yeah, so I think I must agree with everything that's already been discussed in the first panel on how we can look at and how we respond as a central bank to the stable coin. For Indonesia itself, we does not recognize stable coin or other unbacked crypto as a means of payment, although our legal recognize them as an investment vehicle, investment asset. So it's a bit tricky in Indonesia on how to deal with this with the stable coin. But when we talk about the risk, especially from Indonesia perspective, because we are a small open economy, certainly dollarization become the biggest challenge for us when dealing with this stable coin. Although when we talk about dollarization, it can be dollarization in terms of store value as well as in terms of means of payment. We do not see that this dollarization will come from the means of payment side, although we do see that the risk will come from the store value side, especially the currency competition when market pressure happening, or maybe in times of crisis. And the flow of the exchanging is become more seamless because of the technology itself. Right now, people have their own, already have the mobile application when they can move their asset and ownership in a very fast way, very quick, and this has become a new threat for us on how to deal with that. I guess enhance or strengthening our regulation in dealing with this kind of situation will be very, very important. But as the first session also mentioned, the biggest challenge is because when we talk about stablecoin, it falls under the jurisdiction of several regulators. So the coordination will not be that easy. But there is something that we need to do in the domestically. We need to coordinate with other regulators as well as regulators in other countries. The biggest question is for stablecoin is it is something that resembles money, but does not resembles institution, like you said. it will not be easy to deal with them in terms of how to regulate them. Somehow the old mindset on how to regulate the institution will not work for them, and we need to see on how we approach this. About the domestic stablecoin, whether it can become an alternative for the USD-backed stablecoin, for example, I do not think that that will be the case, because somehow we are afraid that allowing for domestic stablecoin will invite more fragmentation in the industry. Even like Professor Ueda mentioned in the first session, even for the tokenized deposit issued by commercial bank, the challenge will be on interoperability and interconnectivity, including the fungibility of the money itself will not be certain when we look at the domestic stablecoin as the response. For CBDC, I agree with you, Andrew. I mean, the biggest challenge for CBDC is actually on, to add what Andrew had just mentioned earlier, is how to ensure adoption. There is the critical point that every single central bank would need to have the answer before they decide to issue CBDC. We already seen so many live production, full production of CBDC that does not very successful, and the problem is on the adoption. Is already always that is the problem, and every single central bank would need to think that this kind of CBDC is different from doing business of issuing cash payment, paper money. When we deal with the paper money, we don't need to consider about how to build the ecosystem, because the ecosystem is already there. It is already given. But when we decide to issue CBDC, central bank will need to think on how to build the ecosystem, which is not easy. It's not easy things to do. So I do not think, although CBDC will be an ideal way or solution to deal with the stablecoin, but again, this is not something that easy to do to be dealt with by the central bank. So I guess the enhancing regulation will be and supervision will be so far the best solution for the central bank to deal with this stablecoin. Thank you very much.
Thank you. So just following up on what Andrew and Ryan have mentioned, do you think the retail payment connections which have come into existence in the last few years, have they already solved some of the problems which, say, a retail CBD was expected to solve when the discussion started? And probably that's one of the reasons why the case for a CBDC has weakened at the margin. Any thoughts, Andrew?
Yeah, I think that, having worked in payment system modernization and transformation now for a while, it's super hard to modernize a payment system. You have such a vast ecosystem of players involved. It's any change at the center just cascades into the entirety of the ecosystem, and it takes years and a lot of effort. And so, the investment seems to be better placed there to upgrade your national systems, to add much better APIs and connectivity to lower the cost for the ecosystem, to think about access and policy issues that really meaningfully help that competitive transformation to occur. And that to me seems a better use of time and money and energy than reinventing money, because the bang for the buck is just, even if you successfully do launch a CBDC or some sort of product like that, then you still have to play the ecosystem game and get acceptance and clearing and rules, and everything doesn't go away. So to me, it's a strange use of time and energy at this point. You know, it's been a very valuable thought exercise, and I think it's in many ways catalyzed more transformation in the traditional rails, because people had to kind of wake up and realize, you know, if you worked in payments in the 90s and early 2000s, maybe not a lot moved, but now things are happening, and I think in good part it's because of that energy and the buzz around, you know, broadly speaking, tokenization or whatever, but I think the benefits probably will be felt on the other side. You know. Yeah.
Thank you. Ryan, any thoughts?
Yeah. So the question is about the...
Yes, so the question is that because of the bilateral linkages, has the case for a retail CBDC weakened? Because they are already solving some of the problems which the retail CBDC was expected to solve.
Yeah, again, I guess the biggest challenge for the retail CBDC is how to, for every single central bank, how to build the ecosystem. I do not think that it will be the case in the short run. There is still a lot of work need to be done when central bank will have a plan to go into that direction. And it is more practical for the central bank right now to think about how to enhance the existing rail, especially take the leverage of the fast payment system, interconnectivity, integrating between person to merchant and person to person use cases, because it is something that is not easy to do with. And how to promote, I mean, the domestic connectivity as a basis for the cross-border connectivity, because in our experiences, when we connect with some other countries, the biggest challenge is how to get the reciprocality. Yeah? As I mentioned earlier, every single country that we connect with Indonesia will have an access to the almost 30 million of merchants and almost 60 million of users, but not the other way around. That's the biggest problem. So, I mean, building up the domestic interconnectivity will be a necessary condition for the effective cross-border payment going forward. So, I mean, to put our effort on this, how to enhance this aspect will be much more important. I don't think that cross-border cross-border retail CBDC will be the case as at least in the medium term. Thank you.
Thank you. Andrew?
Just another thought, and sorry, Julianne, please jump in, but I guess on the retail side, I think Ryan and I are in violent agreement. Probably the space that might still have some potential when it comes down to CBDCs is the wholesale space, right? So because one of the primary frictions that whether Nexus or any other thing can't solve is FX settlement, right? And so how can we imagine a financial infrastructure that actually takes that T+2 problem down to anything better, and I think that's still continuing. And I think the BIS work over the years has, if you probably scanned it, would skew heavily towards the wholesale side. And I think there's a reason, because the blast radius that's a big change, but the blast radius of a new clearing arrangement and a settlement arrangement for cross-border wholesale flows is actually still much more limited than 30 million merchants and hundreds of millions of end users. Like you still have a fighting chance of, I think, implementing or reimagining a wholesale system that's got a much lesser number of participants, but where liquidity can be further optimized and better settled potentially, because that could reduce. That's the real elephant in the cross-border payment room, I guess.
Thank you. We have a few minutes, and I still have one question for Julian. But in the meantime, if anybody has questions, we can take it after this. Those who are joining online can type their questions on the chat, and I'll read them through. So Julian, because we have developments on the tokenized money front, how can private sector leverage on these initiatives? What are the problems you can solve if tokenized money actually became more prevalent than what it is right now?
Yeah, in the earlier panel, I think there was a comment about responsible innovation, and I echo that, right? Grabs, I don't think we're in any plans to launch our own stablecoins, or create our own currency, and I believe that, that belongs with players that, probably has the bigger ownership and responsibility to do so. And we are about a problem to solve, and I think, Andrew, you mentioned, liquidity, and I think that's where stablecoins probably plays, or stablecoins and on-chain tokenized payments probably plays a big role. So today we actually have a collaboration with StraightSax, and we actually use a sandwich model. So what that is actually tokenized money moves on-chain, but it's under the hood. And to your point, how do you explain an XSGD to a basic consumer? So we don't need to do that, but we actually allow the transaction to move under the hood, so that but the users continue to interact through trusted mainstream interfaces like GrabPay wallet and the GrabPay QR. And that gives us the ability to turn today's fragmented, high-friction, cross-border payments into real-time, programmable, and interoperable networks as well. But it also allows regulators to continue to retain control over the fiat on and off-ramp with KYC on both ends. So it allows the private sector to optimize the middle layer, and also allows us for speed, transparency, and costs. So to some effect, what Andrew mentioned, I know that there's also tokenized intrabank transfers that different banks are exploring as well to give that speed. So I think it's about liquidity. And in a market like in ASEAN +3, where we are creating interconnectivity, bilateral, and almost instant payments, is there a need for it? Well, it also requires a lot of pre-funding from the parties, right? And so how do we minimize the cost of that pre-funding? And potentially tokenized payments is where it becomes the infrastructure to enable that.
Thank you, Julian. I'll just look at the audience if there are any questions you would like to ask our panelists.
Right, good morning, thank you. I have 3 questions probably for the 3 panelists. So the first one is, what systemic risk emerged from linking Asian, China, Japan, and Korea's payment systems? And how can they be mitigated? Second one, how can central banks coordinate liquidity and risk management protocols to support multi-country real-time settlement? The third one is, what contingency plans should exist for disruptions affecting one major regional payment hub that could cascade through the region? Thank you.
Thank you. Who would like to go first? Andrew? First and third question, probably.
Sure, we can leave the hard questions for Pak Ryan, but okay. The risks are, I think, inherent with any payment system in the sense of, in the age of AI, there's clearly also a risk of scams and frauds, and we see that in the domestic frontier. Regulators and, I'm based in Singapore, and, you do see a lot of consumer awareness and education around, making sure that users are at least aware of things like authorized account push payment fraud, which is, not a risk that the payment rail introduces, but rather, it's pretty easy to con somebody into sending a payment to someone they think they're, but of course it's going to a fraudster, and so that's, I think, something that all jurisdictions are grappling with, and to the extent cross-border instant, takes off, that could exacerbate that risk, and so having inbuilt analytics tools, having good information sharing, having a rule book and a dispute resolution process and a means of recovering funds for consumers all of the above is critical to mitigating that risk. Again, not unique to just cross-border services. Those are endemic to any payment system, but potentially exacerbated for sure in a cross-border instant world. What was the third question? I'm sorry.
About the resilience of the system. So if
yeah, I mean, I think those are just best practices, right? It's you know, it's having multiple operating regions and zones, having all the IT operations and incident management programs in place. I don't think there's any particular unique resilience risk to cross-border payment system operations. It's just follow those best practices and really make sure that you can test and show that they work. Because I've seen that movie before where people have 3 and 4 data centers, but they test it like once a decade, and when an incident happens, they're too scared to actually do those failovers. So, you know, an operating muscle that really needs to be, you know, in good shape.
Thank you. Pak Ryan?
Thank you. Thank you very much. I think when we talk about retail payment, including in cross-border context, the systemic risk will be much more lesser than when we talk about wholesale interconnectivity. So I guess when the ASEAN Plus 3 has already been interconnected wholesale, maybe it is time for us to think about how to tackle the systemic risk. But when talking about risk, especially on the retail side, operational risks, including the cyber, the ML safety, will be much more heavier to look at. And I think that this is something that we need to be anticipate from the beginning when thinking about interconnecting the ASEAN Plus 3. About the central bank engagement on this interconnectivity, including in the retail side, I guess liquidity will be much more relevant aspect that we need to think about in terms of ASEAN Plus 3, especially when this interconnectivity will also dealing with the bilateral currency pair. So it is not a cross-currency pair, but when we're thinking about the ASEAN Plus 3 payment, is also combined with the use of the bilateral pair in each countries, liquidity will become a big issue that needs engagement from the central bank. There is a lot. One time I heard about the discussion about central bank money market in the region, something like that, to provide liquidity across different currency. So this is something that we can think about how to build this in the ASEAN Plus 3. So it is not only payment interconnectivity, but also bilateral currency connectivity. Yeah, thank you.
Thank you, Pak Ryan. I see we have run out of time, but Aziz has very kindly agreed that we can take one more question if we have. Anybody from the audience? Yes. Yes. You can.
What the panel has been saying about the blast radius of keeping it on the wholesale side, and why, from a technical point of view, this makes perfect sense, moves the needle much more. But I argue from the political economy side, and here's an encouragement. It's all well and good. We talk about payment systems that means a lot to us in this room, but the man in the street does not understand that. The ability to use your payment systems from one person to another, and that we quite haven't reached there yet, might actually be the game changer that encourages a greater use of it. So I encourage us to think a bit from the political economy side of how to have the solution solve some of our existing problems. Thank you.
Thank you. Andrew?
I think it's a great point. And you know, what I often try to talk about when it comes to what we're doing is, you know, one of the value propositions of something like Nexus, which, you know, you can read about online, is indeed to support the domestic brands, right? There's a tremendous investment into education, consumer awareness on, if you're in Thailand, Prompt Pay, if you're in Singapore, Pay Now, if you're in Indonesia, whether it's QRS, you know, these are domestic brands that have been well scaled and adopted, but there's no ability to transfer that across borders inherently. And so what we're trying to do is, you know, on the back of your card, there's a logo. It depends on which card scheme you're on, but the Plus network is, if you go to an ATM in Turkey, your card works because there's a lower level brand that allows that to happen, and there's a scheme and an arrangement that allows an ATM transaction that zero people think about until they need it, right? And so that's kind of what we're trying to do with Nexus, to be completely transparent. But I think it does allow that domestic brand, so now I can be a do-it-now customer from Malaysia and go wherever and have some confidence that that transaction might work, because there's this underlying infrastructure and layer that allows for that interoperability to happen. Super easy to say and super hard to do, but you know, a lot of these inspirations come from indeed the card world, and we can't forget how robust and scaled those are as competitors and innovators, right? They continue to innovate and layer on top, and it's working. But that's the challenge we face in our kind of context of, you know, trying to enable a domestic instant payment universe that competes with that card space. It's very difficult to do.
Thank you. Do the other panelists have anything to add?
Yeah, just on adoption and you know, it sounds quite basic, but can you imagine a world where you go to a merchant and they display 50 logos and you have to try and find within those 50 logos, hey, what's a wallet that resonates with me? It's super tricky. And so, you know, definitely, and I think adoption across that benefits the mass market will require both a private and public partnership, and every party has to play its part, right? And some parties might be a little bit cautious about retaining their revenues and not wanting to actively promote, even though they are participants in the network. But I think it actually benefits the entire consumer base, and they need to think that it's unlocking new segments that they would never have had access before. Yeah.
Thank you. So we have run out of time. It was a very enlightening discussion. Thank you, all three of you. Please join me in appreciating the panelists. Thank you.
Okay, thank you very much to Prashant and our insightful panelists. And as always, great to hear some of the questions from the audience here as well. So thank you very much. And can I invite you just to stay on stage and take a quick photo? While they're doing that, the public live stream is going to end. So thanks to all of us joining us on the live stream. We hope you enjoyed the discussions and found it useful. The WebEx webinar will continue for those member authorities who signed up virtually. Okay, we're now going to move to session 3, Shaping the Future of Regional and Global Financial Integration. As initiatives such as Nexus, ABMI, Project Meridian FX, and Project Agora evolve, the region stands at an important crossroads in designing more integrated, interoperable, and resilient financial platforms. The next session will discuss some of these issues and will be moderated by Ms. Runchana Pongsapan, who's the group head and lead economist at AMRO. So the floor is yours, Ms. Pongsapan. Please introduce the panel.
Okay.
Okay, thank you very much, Aziz, for the introduction. So good morning, ladies and gentlemen. The previous two sessions have already tackled stablecoins, the regulatory issues, and the various payment initiatives already happening in ASEAN Plus 3. So we talk about bilateral connectivity, multilateral nexus, private sector participation or landscape. So after that, we take a step forward and discuss the long-term vision of regional and global integration by identifying the key elements for building the close collaboration and the establishment of integrated platform. So several aspects here to piece all the jigsaws together